The stock market had a tough week, but more importantly, the economy is still having a terrible time dealing with numerous factors that have piled up over the last while. Central banks have continued with QE in their accommodative approach to market instability. This has had a 100% failure rate over the last 100 years, so it seems like they will give it another go anyway. Well, okay then. You came here for the truth, so let me unveil that for you. Today I have an important episode. First, I'm going to cover some updates. I want to look at what's happening in the market, talk about the FANG stocks briefly. We're going to look at WeWork. Then I'm going to show you what's going on in the real economy, the shipping industry, and some other factors. Then I want to get into how this actually affects real people in their daily lives. Let's get into it right away. Take a look at what's going on in the stock market. You can see the chart on the left-hand side. Over the past 5 days, the market has come down. You could see that on Friday's trading session, the Dow Jones was down about 70 points. Also want to note the fact that the S&P 500 is down under 3,000. It has really struggled around this level here, finding some serious resistance because, of course, we've seen the geopolitical issues between China and the US. We've watched the Brexit issues compound. We can see the real economic slowdown that is underlying all of these news articles and the talking points. We've had serious issues with the repo madness that I have covered at length here on this channel. We can see that the market is really struggling right now, and there are so many factors which are adding up to what we are seeing today. Ultimately, we need a trade deal right now to be able to burst through that 3,000 and remain higher. We also need to see easier monetary policies, and that's not just the Federal Reserve, but of course most importantly coming from the Fed, because the other central banks around the world are always looking to the Fed and seeing what they are doing, particularly in the emerging markets. Let's take a look at this one, showing the FANG stocks that they are down to the levels not seen since the beginning of 2019. All the while, we are being told that these stocks cannot lose. Now, obviously, if we pull this chart back to 2009, you're going to see how fantastic these have done. By the way, this is just showing you from the beginning of 2018 up until present day. But look at what has happened. It is not looking good for these stocks, which are supposedly the best of the best. And why? Because the smart money is starting to readjust their portfolios. The average person doesn't do this. They are simply adding more and more and more. I keep seeing it all the time, and my goodness, these people are going to regret their decisions. Warren Buffett bought Apple and Amazon, therefore I will buy Apple and Amazon. Warren Buffett was buying right up into the last recession. He's on a completely different playing field than you and I. Do not compare yourself to Warren Buffett, because that could mean a very disastrous scenario for you. You don't know what he's up to. It is not simply that Warren Buffett bought something, so should you. This is a strategy that has a potential for failure. Quick update just showing you the negative yield globally, and while it had peaked out approximately $17 trillion, it did come down to a level that was about $13.5 trillion. It has now climbed back up and we are approaching $15 trillion yet again. Just wanted to give you an update on that. You can also see gold on here, which is hovering around the 1500 mark. Of course, the real data shows us that the PMIs globally, this happens to be JP Morgan's global manufacturing PMI, but when you look at this on all levels, all parts of the world, PMIs are down, down, down. They are contracting, and it has been going on most cases since the beginning of 2018 all the way through up until present. Just wanted to give you an update on what's going on with WeWork. Their junk bonds slashed again by the S&P amid company turmoil and the failed IPO. They were going to bring out their stock, and all of a sudden things turned around for them because they had to open up their books and they realized this company here is bleeding out. And that's never a good thing. Investors don't want to take that on. The CEO is forced to step down. He's got to sell the private jet. Not good for this particular company. company, okay? This is just showing you that just because a company is a unicorn, it's so fantastic, people are talking about it, social media buzz, this and that, doesn't mean that you should invest in it. You have to be much more careful. WeWork's lease commitments are among the world's largest. Take a look at this. Looks to be approximately $50 billion. This isn't a good thing because a company like this cannot withstand such an extreme load on its back unless the revenue that it's bringing in is substantial. And this is something that if you look at the cost of WeWork and understand their business model, as far as I'm concerned, it isn't sustainable. WeWork Locations in the US, just wanted to give you an idea of where the majority of those locations are. Primarily New York City overwhelmingly has the most locations, and you can see this making a lot of sense because the rents are so excessively high. If somebody wants to go get some office space, maybe it's better to just rent a desk. They can do their work and they move out. In fact, a lot of these office towers for these big businesses, maybe the big banks, other companies, it operates in the same way. You go into work with your laptop, you sign into a desk that is yours only for that day. And sometimes if you go on lunch, you have to sign into that desk again if it's available. Many companies are doing this now. They save on real estate ultimately, having people work from home and so on. So definitely the landscape has changed, and WeWork is trying to take advantage of that because some of these big corporations are signing up with them. However, it clearly looks like they cannot sustain this business. I'm interested to see what happens. I do think it's important, not as an investor in the company, but to see what happens in the economy and how it affects this particular corporation. Okay, now switching gears. Container shipping rates remain on a downward path in September as the most recent round of US tariffs increases fails to excite much shipper interest in front-loading their imports. Meanwhile, ocean carriers are looking to cut even more shipping capacity in hopes of better demand in the fourth quarter. Now, usually you do have a jump in the fourth quarter because all of these corporations load up more inventory around this time frame in the preparation for the holiday season. However, that may not be the case as much as we have seen in previous years. Right now, we're dealing with some major issues that have slowed down the economy. Sure, you might see a spike from Q4 looking back on Q3, but ultimately comparing that to the year before, and so on, it may disappoint. And just one thing that I wanted to mention here, since the beginning of the year, container rates have dropped a full 34% despite it being in the middle of peak season. So if you have a business that is importing from places like China, this is some information that you can use as leverage in your negotiations. Take a look at the US dollar compared to the Chinese currency, look at the container rates, and you can say you need to work with me on the price, but that's a whole different topic. International passenger traffic fell substantially during the month. LAX saw 77,000 fewer passengers, a decline of 3.1%, pass through international gates in August compared to a year ago. Now, while we can see that fluctuate from time to time, in the third paragraph, air cargo tonnage fell more than 8% in August compared with August of 2018, and of course, because of what's going on with the US and China. In my personal experience, I have not seen an impact of the trade issues in between these two countries. However, we could see that certain businesses are worried and they are waiting and seeing. US consumer spending slows in August and somehow incomes rise. I don't know how that's being reported, but regardless, what's important to note is that 70% of the US economy is the consumer. If it slows down, panic sets in, you know about that. But of course, we have to see how the trend goes, particularly into the fourth quarter here. I will bring the data for you, have no fear. U.S. median household income was $63,000 in 2018, which is not significantly different from 2017. That is according to the Census Bureau. Now, there's some information here if you're interested in checking it out, but I just wanted to show you this because it really hits home. Cumulative growth in mean income. Now we can see that incomes have risen. I'm sure if you asked your grandfather what they made in a given week or month or year, compare that to what the average person makes today. Today they make a lot more. Now, of course, that doesn't factor in inflation all along the way. That isn't real income. That's using their phony numbers and their whole gamed way of providing you with statistics that truly are there to be manipulative. Take a look at the comparison here. So you're seeing the 81st to the 99th percentile, the middle 3 quintiles, and so on. Okay, so let's just say the 99%. Let's just average this out, okay? Let's bring that here, and while it has increased over the years nominally, if you take a look at the difference in between this and the top 1%, well, clearly we have a big problem. The top 1% continues to attract more and more wealth. I am not talking about the top 10%. I am not talking about the top 5%. I'm talking about the top 1%. And if we would see the top 0.01% and so on and so forth, you would see that this gets more exaggerated as time goes on. Now, shouldn't that be a concern to anybody that the more money we print, the more it goes towards the very top level? Now, most people do not know. All they know is that they are hopefully currently employed. Maybe they have to take on 1 or 2 or 3 or 5 jobs in order to be able to survive, but they are simply just too busy to worry about all of the details. I tried to condense this information down to make it digestible to the average person, but truthfully, the average person doesn't care about this stuff. If you watch this video here, if you are a subscriber at the Money GPS, you're definitely not one of those people. This comes from Berkeley's IGS poll, Institute of Government Studies, leaving California. Half of the state's voters have been considering this. Half of the state's registered voters admit to having given serious 24%, or some 28% consideration recently to leaving California. If you see the prices of the real estate, of the general expenses, of the people in California, honestly, I don't blame them. Particularly when you look at San Francisco, San Diego, Los Angeles, the big cities where most of the population is, you got some seriously out of whack fundamentals going on. People cannot survive in what they are getting paid when the real estate and the energy and so on are just completely out of whack historically, and unfortunately it's only getting worse. Recession or not, many Americans already living on the edge financially. Does this surprise anybody? Of course not. More details in here if you want to see it. This happens to be from a survey, and just like with all other surveys, it's such a small sample size and we don't know what to believe, how the information's skewed. But so many times I see the same information in general and the group that was surveyed is completely different. Nearly 1 in 10 workers making $100,000 plus live paycheck to paycheck, and I've seen worse data than this. Think about if you live in a place like San Francisco, $100,000 is simply not enough to live. More than 1 in 4 workers do not set aside any savings each month. That, of course, will be a problem, not necessarily today, but what about when you lose your job? You're in big trouble. Nearly 3 in 4 workers say they are in debt, and more than half think they always will be, and of course they will. More than half of minimum wage workers say they will have to work more than one job to make ends meet. We've seen this before with Uber and so on, and that is simply not enough to keep up with the everyday expenses. Last but not least, wanted to show you everybody's favorite. Former Fed Chair Yellen says central bank is being too optimistic about the US economy. This is coming from the person, number one, who said that she would be voting for negative interest rates should the need arise, and then later on said that she would not see another crisis in her lifetime. Oh, Janet, you always surprise me. Thank you very much. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting this channel. If you want to learn how to build a business online, I have a completely 100% free e-course to teach you step by step how to sell on Amazon. Okay, you can see this at the AmazonGPS.com. If you want the financial education that was not taught to you in school, these two books have everything you need. I cover the foundation, the history, the asset classes. All the details are located at the link in the description. If you want the audiobook, that's available at themoneygps.com. Hang on a second, before you go, have you seen this video? I do believe it is very important to catch up on this data if you haven't already. Click on it and I will see you there.